Hello everyone, I'm Marcus from My Locks News. I'd like to remind you that you can subscribe to our YouTube channel for daily and weekly updates on the stock market. Today I want to talk to you about a very important topic: how to invest in high-value stocks like Tesla, Nvidia, and Palantir, especially when they are at their peak. I know many of you may be thinking, these stocks are too expensive now, how can I invest in them without risking too much? Well, I'm here to help you understand how to do it. When it comes to investing in high-value stocks, the key is in the long-term investment strategy and in the technique known as dollar cost averaging or DCA. This technique involves investing a fixed amount of money in a specific stock regularly, regardless of its price. This way, when the price of the stock goes down, you buy more shares, and when it goes up, you buy fewer. But before you start investing, you need to create a budget. In this budget, you should take into account your income and your expenses, both fixed and variable. At the end of the month, you should have an amount of money that you can safely invest without affecting your basic needs. Let's say that amount is $100. Out of those $100, you need to decide how much you want to invest in different categories. For example, you may decide to invest a percentage in treasury bonds, which are a safe investment. You may also decide to invest in a college fund for your children, or in your guilty pleasures, like dining out or buying video games. After all that, let's say you have $30 left to invest in stocks. Out of those $30, you need to decide how much you want to invest in each stock. For example, if you're interested in Tesla, Nvidia, and Palantir, you may decide to invest $10 in each one every month, regardless of their price. Now, here comes the interesting part. If you notice that the price of one of these stocks falls 10% below its 52-week high, you may decide to invest more in that stock. For example, if Tesla falls 10% below its 52-week high, you may decide to invest $20 in Tesla that month instead of $10. And when the price of Tesla goes back up, you can go back to investing only $10 a month. This strategy allows you to take advantage of price drops to buy more shares at a lower price, and also allows you to enjoy price increases. And most importantly, it allows you to invest consistently and disciplined without being carried away by fear or greed. Remember, long-term investing is a marathon, not a sprint. We're not here to get rich overnight, but to build a solid and stable financial future. And the key to doing so is to invest consistently, disciplined, and strategically. Now, I want to clarify something. This strategy only works if you choose the right stocks. If you invest in bad companies, no matter how much you invest or how disciplined you are, you won't see good results. That's why it's so important to do your own research and understand well what you're investing in. For example, if you're considering investing in Tesla, Nvidia, or Palantir, you should understand well what each of these companies does, what their business model is, how they generate revenue, what their growth prospects are, etc. Only then can you make an informed decision about whether these companies are a good long-term investment. In addition, it's always a good idea to diversify your investment portfolio. Don't put all your eggs in one basket. Invest in different companies, in different sectors, and even in different types of investments like stocks, bonds, real estate, etc. This way, if one of your investments doesn't do well, others can offset the losses. Finally, I want to remind you that investing always involves risks. Even the best companies can have bad times, and the market can be very volatile. That's why it's so important to invest only money you can afford to lose and be prepared for market ups and downs. In summary, investing in high-value stocks like Tesla, Nvidia, and Palantir can be a good long-term strategy if you do it in a disciplined and strategic way. Always remember to do your own research, diversify your investments, and be prepared for risks. And that's all for today, folks. I hope this explanation was helpful and helps you make more informed investment decisions. If you have any questions, feel free to leave them in the comments, and I'll try to answer them in the next video. See you next time.